Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look on euro currency once again. So situation here stands a bit tricky and sophisticated for analysis because we do not have any clear pattern or something that could lead us to make the final conclusion. Besides, the coming week will be very tricky in events. Mostly it will be under political signs, so you know that it will be meeting of North Atlantic countries in Germany. This will be the Putin speech on 21st or 22nd of the February, and possible Biden visit to Poland. So it's really a lot of political events. On economical events, we will get multiple PMI indexes across the globe, so in Europe and the United States, revision of the gross domestic product for the fourth quarter. What is most important, I think, that might be the Fed minutes. Fed minutes publication, where investors maybe will find something surprising. So that really could bring some unexpected action, and all this really explosive cocktail that we will get. And right in the beginning of this week, on the technical side, at least on the daily intraday charts, we do not have a lot of clarity. So what's the actually difficulties we have with the analysis? On the daily chart, overall context stands bearish. So market is not at oversold. We have the bearish trend, but market is stuck inside of the confidence support. So it still stands around it. And confidence support in general suggests a bit stronger upward bounce, which we do not have it. Yes, on Friday, it seems that our suggestion was correct. Market indeed has reached the 106.80 predefined target, but that's just the beginning of the action. And this performance and standing in the confidence makes uncomfortable to consider taking the new short position. For taking the new short position, it's logical to suggest some upside pullback to some intraday resistance levels, and only there to consider possible taking the new shorts. That's what about short position. For the long position, well, in general it is possible, but only for intraday purposes, because on the daily chart trend is bearish and we are not considering taking the long position on the daily chart. And all this stuff stands on the background of the really tricky combination of the technical factors. So take a look what we have from the one point of view. We have the divergence, and this divergence stands at the confidence support on the daily chart, in agreement with this, that suggests actually taking out of this C point. So if this divergence will work in the same manner as this one, so you can see that divergence has worked and it takes out the top between the bottoms of the divergence. It's the usual target of the divergence. If it will work, it should take it out of the C point, and market should show more or less extended action. We already have the butterfly in place. So potentially the butterfly, it doesn't contradict the idea of the possible upward action, because butterfly actually is a bullish reversal pattern. Currently it just shows minor pullback that we discussed on Friday. So it's just retesting of these lows. But potentially it might be more extended. That's what about the bulls. From the bearish point of view, we could get, for example, Gartley's free drive pattern. So if market will show the bounce up to the confluence, it's around 107.73, 108.15 area. Right with this area, market could just match the extensions of the free drive, and supposedly the third drive should be around 105.65, 105.70, this area. At this point, we also have the COP target of this ABCD pattern, the 618 extension. And this target and this scenario is also actually have chances to happen. We can't deny it totally. So what we could do in the current circumstances, because actually we do not have currently any clear pattern that could tell us definitely where the market is going and how deep the pullback will be. So following the overall common sense, since we have the divergence and when we stand at the confluence support on the daily, it seems that for a short position, it's a bit too early. I would wait at least until the reaching of the 107.75 area and reaching of the confluence. Here at least you will have some protection because it will be confluence, and in the first touch probably if you even will take the short position we should get some bounce. If even we will be wrong later, first on the first touch market will show the technical respect of this level, and only after that probably will keep going higher if it really will go higher. That could give us some protection and chance to move stops to the break even at the first bounce of this resistance area. From that standpoint, this level looks interesting for possible taking the short position, consider taking the short position. Alternative scenario for a short entry, it might be only if market will just break these lows and keep going lower. So we'll get some breakout to the downside. That will be another confirmation that market will not show any other bounces and just keep going lower. For the bulls, I would consider this pattern, but this pattern is only for intraday trading, so you could try to catch here some kind of the ABCD pattern right to the 107.75 that we discussed, but do not use it for taking the position on a daily chart. Here, as you could see, that we could get minor hand and shoulders. So approximately around 106.60 area, you could consider maybe a long entry with the nearest standing stop. Just supposedly that's the area where the right arm bottom potentially could appear if market will start forming. Simultaneously, you could watch for these hand and shoulders as an indicator of the failure. So you know that if hand shoulders fails, market is dropping below these lows, and it might be for those of you who are searching chance to go short. If market will fail to develop that, to improve the success of this upper direction, so this will be also the signs of weakness, and market really could start downside acceleration. So as bears also could keep watching on the how market will behave with this pattern. Finally, the last moment why I think that more extended upward bounce could happen is that if you'll take a look at the gold, you will see that actually market already stands right there. Gold market stands at the strong support, and it is at the oversold on the daily chart. This is really big background for possible more or less significant pullback. Since as euro currencies gold are trading against the dollar, this pullback might be based on the dollar weakness, some temporal weakness maybe. So it means that on the euro currency we will get something the same. The cross-market analysis of the gold with the euro currency, it suggests additional bullish factor for the euro currency as well. And that's why I prefer to wait for a bit higher level and a bit stronger resistance to consider taking the short position. If we will get something really absolutely outstanding, for example, it will be just white, strong, bullish candle, of course it means that we should not consider taking a new short position by far. So that's actually what we have on euro currency. It seems that on Monday we have nothing to do but just watching what will happen as a bulls, as a bears. Bulls will be watching for this minor hand and shoulders. Bears just will be watching for the same hand and shoulders and for the high standing level if upper direction will continue.